Hi, Paul and Carol. This is John Hanson over at Home Savings of America. We did get the audio fixed this morning, so here's the video I have prepared for you. And this way you can look at a couple different options we have in store here. I want to first thank you for the opportunity to allow us the privilege of closing your home loan. As we all know, your home is your biggest financial investment if you utilize it properly. And I think that the loans we have proposed here for you will enable you to pay the home off faster and literally save a tremendous amount of money in interest, which in turn will also lower the real rate of interest that you pay on this loan. As Jack has probably told you, we are a federally chartered bank. We've been around for 75 years. I'm one of the branch managers here. I'm also a certified mortgage planner, in which there are only a few hundred in the country. And I'm going to show you some tools that I've learned that that can help you as well as other clients I've worked with in the past. So here we go. I like to start by, identifying what goals you're really looking for, and everyone I speak with is looking to save money one way or the other. Obviously, in order to save money, most times you do need a lower rate, and the most important goal for you is to pay this home off faster, and this way we can save you, hundreds of thousands of dollars in interest. So here are the loan options I've prepared for you. There are really only two options, and that's the 20 and the 15-year loan. On the option 3, it just shows you the line of credit. If you decide that you do want this line of credit, again, you will only pay interest on the money you borrow. But let's start with your original loan currently. Now, if we take the first mortgage and the second mortgage, your payoff should be right around $148,000, give or take. Your payoff is always going to be slightly more than whatever your outstanding balance is, simply because that, depending upon which day you close, the interest gets calculated, and this will enable you to have what's called a deferment. So most likely we'll be closing either at the end of this month or the first week of November, and that will enable you to get November off and December off, with your first new payments beginning January of 2011. So here's your current interest rate of 6.25. Now keep in mind you are on a 30-year loan, and also keep in mind that we're consolidating a line of credit in which you're paying 2-3% on. So as far as the savings go, you probably won't see much of that, but the way I worked up the numbers, you actually will be saving a little bit of money per month, but again, most importantly, saving a tremendous amount of money in interest by reducing the term of your loan. Excuse me. So here's your payment with your taxes and insurance. I'm sorry, your insurance you pay separately. We can keep it that way, or we can include it, whichever you prefer. But here's the first mortgage payment. Here's the line of credit. I know, Carol, you had mentioned you were paying about $350 a month prior to you leaving work. Well, I also have included the Bank of America credit card here, which is a minimum payment of $237, and I'm sure you're paying a little bit more than the minimum each month. So if we take the $1,274 and we take the $587 between the line of credit and the credit card, your current monthly obligation is $1,861. I didn't include it here, but $1,861 is what you're currently paying. And you also have 25 years left remaining on that 30-year term. So here are the two options. Your option 1, the loan amount will include your payoffs, the Bank of America, the line of credit, and the first mortgage, and whatever closing costs, bank fees, and state fees are required. Everything is included in your new loan. We will also be escrowing your new taxes, because you do pay your escrows in advance. But you will also be getting a refund for whatever your current escrow balance is with your current lender. And we usually will call them usually about a week before you're closing, just to confirm and have you write that number down so that you know you're getting a check for $2,000, $3,000, or whatever that number may be. So on the 20-year note, you're looking at a 4.3 rate. You're looking at a total payment with your taxes included of $1,767. So this is actually about $100 less than your current obligations are, and the best part is 20-year term with the biweekly, which will be further explained in the next slide. You'll be paying the home off in 16.5 years. The amount of money that you save, which is the amount of mortgage payments that you would otherwise be paying by not refinancing, totals $123,000 and change. Okay. Also, by paying the home off faster with the biweekly, you're paying an actual rate of interest. Your real rate of interest is 3.6%. So although your note rate says 4.3, your actual rate of interest is 3.6. Now on the 15-year term, you're looking at a much lower rate, but you're looking obviously at a slightly higher payment. The difference between the 20 and the 15 was $169 per month. So if you look at it this way, is it worth $170 per month? And if I equate that in terms of years, it's only $2,000 more per year. You're looking at paying the home off a little about almost 4 years faster by paying that extra $170 or $2,000 per year. So if you can afford it, again, you're paying $1,861 now. If you can afford another $70 a month, I would go this route. If you can't, again, you're not obligated to pay the higher $170 per month, and you can always add more if you like. I know you discussed the annuity and possibly paying the mortgage down. That will just allow you to pay this home off even faster. And I can really tweak those numbers where, say you want to pay an extra $50 every 2 weeks, $100 a month, or maybe $100 every 2 weeks, or $200 per month. That'll actually accelerate the term by paying it off faster and actually lower the rate of interest as well. So those extra 4 years, as you can see, $174,000 in interest. It's actually more than your current loan amount. And people don't realize, the longer the term you have on the mortgage, the more money you pay in interest. It's really that simple. So by taking the 15 on the biweekly, this is what we get. And this is your actual rate of interest. Now, the last option, your line of credit, unfortunately, the rate's not going to be, I think prime today is 3.25, but because of the loan amount and the LTV, you're looking at a 5% interest only. Again, it is interest only, so in comparatively speaking, it's roughly about 2.5%. So again, this is just your emergency fund. It's nice to have it. You may take out 10. I just kind of worked up some preliminary numbers. If you did take out $25,000, it's only going to cost you $100 a month. If you took out the full line of credit, which hopefully you won't have to do, just to show you though, if you needed it for an emergency, it's nice to know your payment's only going to be $200. Moving forward. This is a little more detailed on the bi-weekly, and this shows you exactly what you're saving. So what we plug in here is your loan amount of $167, your interest rate, your note rate, the term of the loan, 20 years, the current monthly payment divided by 2, which is, it's the same payment just every 2 weeks, taking automatically out of your checking account. This is the amount they would take on the bi-weekly. And again, if you wanted to add another $50, $100 per month, I can work up those numbers, and obviously those payments will change slightly. Here's the biweekly info on the 15-year. Here's your rate. Here's your note rate. Here's the term, 15 years. And here's your total monthly payment, as we saw earlier. And the biweekly amount would be $971.95. This here shows you basically what we just outlined in the options. A 20-year mortgage, as you can see, home paid off in 16.5 years. The real rate of interest, even though your note rate is 4.3, you're actually paying 3.6. And on the 15-year, it even gets even better. Okay, 15-year loan, home paid off in 12.8 years, and the real rate of interest is 3.2%. I asked you that if you do have any questions or need further explanation, to please take some notes. This way, when we go over everything together, I can address those questions, answer those questions, and make you feel comfortable with your decision. At this point, I'd like to kind of recap and make sure that we've accomplished our goals that we set out forth. Obviously, we want to save money. As you'll see, we're going to either save $125,000 over the life of the loan, or $175,000 by going with the biweekly. We obviously have lowered the rate no matter which way you decide to go, the 20 or the 15-year, and our main goal of paying the home off faster. Well, currently you have 25 years left on this mortgage. With the biweekly on the 20, it's 16. With the biweekly on the 15-year, it's a little bit less than 13 years. And what's very important to me, Jack had told me you had some difficulties with the broker over at TD Bank. We are a federally chartered bank. We are also a savings and loan bank depository. But what's important is not just the company you're working with, but the individuals at that company you're working with. I pride myself on my integrity. So if you want a smooth closing, you don't want any surprises or last-minute changes, which, to be quite frank with you, I don't have the time to start changing things and have surprises at the last minute. I'm the type of guy you want to work with. I've been very privileged and honored to have closed thousands of loans in my career, and the one thing I can assure you guys is that I will be available to you 24/7. You have a question on Sunday night, you can call my cell phone. You have a question early in the morning, you can call me. If I'm not there, it'll get routed to my cell phone, and more than likely I'll be available. If I'm not in the office or I'm running around, you can leave a message and know that I'll get back to you within a couple of hours. So the other thing to keep in mind is myself and Jack will also be helping you with this loan. We're going to be on the phone with you every couple of days, keeping you informed every step of the way. So I want to thank you for the opportunity to serve you, and I really hope that our relationship can build where I can be used as a valuable asset to you, because I can tell you one thing, having a mortgage planner and a professional that you can really trust and someone you can count on is an invaluable resource that every homeowner can only dream about. To be frank with you, rates all-time lows. You will never ever have to refinance again. So this is it. If you need cash, we do a line of credit. If you're purchasing another property, I'll be here for you. You have a friend, a cousin, a relative, a colleague, anyone that you know that is looking to save money, now is the time to take advantage of that. So I want our relationship to grow. I hope it lasts for years to come. I have some of my best friends today or clients that I've closed 5-10 years ago, and we stay in touch, and we've just really developed some great relationships. So call me once you've decided which loan option you prefer. Call me with any questions so we can address them, and hopefully you'll get a chance to view this tonight. If I hear from you by 4 p.m. today, I will have all the paperwork drawn up, overnighted to you. If it's tomorrow, that's fine. But you'll have all the paperwork the next day, including a checklist of the documentation we'll need. So thanks again for the opportunity. I'll talk to you soon, and have a great day. Look forward to talking with you soon.